In this video, you're going to learn why your net worth skyrockets as soon as you hit 100K. Hey friends, welcome back to the channel. And if you're new here, my name's Ed and I'm an economist turned property investor. And when I was a kid, my mum dated a guy who owned a pie shop. Now his name was Mark, the pie man, and he was a successful businessman in the small town that I grew up in. And he taught me a lot of things. The best money advice he ever gave me was first you work hard for your money, then your money works hard for you. And there's a lot of sayings that are kind of like this. Things like the rich get richer and you need money to make money. And even this little gem that I saw on TikTok.
The first million is hard, but the second million is inevitable.
And all of these sayings, they sound true. But when Mark the Pie Man first gave me that advice, I didn't fully know what it meant. Now, 15 years later, I went looking for the data and I've actually got the numbers to prove that he was right. Because there are a lot of people stuck with their net worth between 0 and 100K. In fact, 22% of households are stuck in this stage. But once you get above 100K, you see all of these people growing their wealth really quickly. After people with wealth between 0 and 100K, the second largest group of people are those with a net worth over $1.5 million. But why is this the case? How come there are these 413,000 households stuck in that 0 to 100K band? I've been studying economics since I was 14, even before I met Mark the Pie Man. And the big concept that comes up again and again is this idea of the scale of capital. So let's say you've got 10 grand. You invest it in a growth-based managed fund and that returns 8% per year. Sometimes it's more, sometimes it's less. It will take 30 years to turn that 10 grand into $100,000. But let's say that you started with 100 grand. Everything else remains the same. How long is it going to take to turn that 100 grand into $1 million? Well, it's the same amount of time, 30 years. So in situation one, you start with 10 grand and in 30 years, you make another 90 grand. In situation two, you start with 100 grand and over the next 30 years, you make $900,000. Exactly the same. The only difference is you make 10 times more money because you started with 10 times more money. And that's why you hear that saying that more money makes more money. And as part of my research, I actually just released some really interesting stats on my daily show, the Property Academy podcast. And we found out that your net worth increases exponentially with age. So the average 20-year-old, their net worth is 3 grand. The average 30-year-old, their net worth is 34 grand, 10 times more. The average 40-year-old, their net worth is 3.5 times what the average 30-year-old is. And the average 50-year-old, their net worth is 2 times more again. And the average 60-year-old, yep, you guessed it, they're worth 90% more than the average 50-year-old. Now, why is this? It's because as you get older, you get more experience, you get a pay rise, you increase your income, you've made more money so you can make more money. But there's one other big factor that's going on that I've found in my research. And I call it the barrier to assets. So once you've got your 100K, what do most people do? A lot of people try and buy a house. They take out a mortgage, they move from being renters to being homeowners. And at the start, owning a home is more expensive than renting, especially today when interest rates are high. But over time, rents keep going up, but your mortgage payments stay the same as long as your interest rate stays the same. So after 6 years, owning your own home becomes much cheaper than renting. And if you're spending less on where you live, that means you've got more money to invest in other things. So not only do you use that initial 100 or 150K to go and buy a house, which then goes up in value, and that of course grows your wealth, but that process also saves you money. So now you've got more money to go and make more money again. But to buy that house, you usually need at least 100K first to use as that deposit or down payment. That is the barrier to asset. So you've got to get that first 100K before your wealth can really start to take off. And to prove this point, it takes over 9 years to save the $139,000 deposit that you need to buy the average first home in New Zealand. And let's say that you use that deposit to buy a $695,000 property. Again, that's the average house for a first home buyer. Well, if that house then goes up in value by 5% a year, the long run average, it'll take less than 4 years to make your deposit back again, the same 139K. So it took over 9 years to save your first 139K. Then it takes less than half that time to make the same amount of money again, under 4 years. And that's because as your wealth goes up, you've got access to other types of assets and investment opportunities. So if you start saving at 15, like what can you invest in? Well, you can save that money in a bank account. Maybe you can dabble in some shares and managed funds. Then you get richer. You can get access to term deposits. Then you get richer. You can buy a house. Then you get richer again. You can buy an investment property. Then you get richer again. You can build a portfolio of investment properties. You get richer again. Maybe you're putting money into shares. Maybe even start owning some businesses. So as you get richer and richer, you've got more investment opportunities that start to unlock. And Graham Hart, New Zealand's second richest man, is a really good example of how this works in practice. Now, Graham, he's worth $12.1 billion, but he didn't start out rich. He dropped out of school at 15, became a panel beater and a tow truck driver. So how does a tow truck driver become a multi-billionaire and get to roam around the world in a $200 million yacht? Well, he actually reveals part of his strategy in his MBA thesis that he wrote back in 1988 at Otago University. And it's a strategy that we can all learn from and actually steal. He goes into debt to make more money. So Graham Hart got rich by buying things like businesses for $1 billion with a bunch of debt, and then he increased the business's value to $2 billion. And you know what? If he's got an asset worth $2 billion with $1 billion of debt, he just made $1 billion. Now, obviously, most of us, we can't get $1 billion loan to go buy a lot of businesses. And Graham didn't start that way either. But he started with a small catering and party hire business in New Zealand. But then again, as you get richer, more investment opportunities start to unlock. And I'll tell you how I apply the same strategy. So in this video, I talked about how I bought an investment property with $0. And the way I did it is that I owned this house. It had gone up in value and I'd paid down some debt, so I borrowed more money against it to use as a deposit for this property. So I could buy that house without any cash of my own. Now, when that goes up in value, I get to keep all of that increase in value, which is often called capital gains. Effectively, you're using one house to buy two houses. Then you use those houses to buy a third house. And then you repeat this as many times as you can. And I'm definitely not trying to compare myself to Graham Hart. He's worth $12.1 billion, and I'm definitely not worth $12.1 billion. But the concept is the same. And this is the path many investors go down. You know, the Reserve Bank recently put out some number crunching, and they showed that, depending on your strategy, an investor could buy up to 4 to 6 rental properties in just 10 years. And at my company, Opus Partners, we help Kiwis grow their wealth through new built investment properties. And through that process, I met Mary. Now, she wanted to invest in property, and she owned her own home, but she was just getting started investing. And the thing that held her back, it actually wasn't money, it was herself. She was hesitant to buy her first investment property because she couldn't see how she'd build a portfolio of up to 10 investment properties. And you know, I was saying to her, Mary, don't worry about buying your 10th investment property yet. You've got to take it a step at a time and buy the first one first. And that's the point of this video. Don't focus on trying to make $10 million. First, focus on making the first 100K. Then it gets easier, so you can focus on making your next 500K. Once you've got that, focus on your first million, then on getting to 2.5 million. And 15 years later, I finally know that Mark the Pie Man was right. First, you work hard for your money, then your money works hard for you.